You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, if you don't, you came to the right place. Yes, this is TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, reminding you, if you want to join us for all the fun going on, pro Q&As, options oddities, after vol views, giveaways, early access to a lot of our content, including all those live streams, which people forget they do go up right after the shows pretty much. So if you don't want to wait for the podcast, you want to get access to those, but you can't make the live, it's a good intermediary step there as well. You get all that as giveaways and, of course, a whole bunch more. theoptionsinsider.com/pro. You get your own super cool podcast feed. Man, there's a whole bunch of content waiting there for you. The second you hit that join button, welcome to all the folks who've been joining us here so far in the new year. We are off to a rollicking start in the markets and a fun time over there on the pro. Speaking of fun times, it is always a fun time on TWIFO when we are joined by our good buddy, none other than Mr. Dan the Man Gramza from Gramza Capital Management. Mr. Gramza, welcome back to TWIFO, sir. For you, for the first time in the new year, how has it been that long, sir?
I know. Mark, great to be with you. It's always fun to explore these markets together and always a lot to talk about. You know, the one thing for me, I've never been bored when it comes to being involved in the markets. There's always something going on.
I missed your big shindig out there in Vegas over the weekend. How was your session? What did you talk about, sir?
Well, we had one on how to identify opportunities in 2025. So I looked at the fundamental drivers that we look at for the outlook for 2025 and some ways that I break down fundamentals in terms of typical, where you see a report that comes out every month, like labor numbers. Then you have things that are anticipatory fundamentals, where the market responds to something anticipating a future result that hasn't happened yet. And then you also have fundamentals that are a surprise that you don't expect. That happens about 2% of the time. And then we looked at Japanese candles the way I look at it, called behavioral Japanese candles. And surprising to me, we didn't have enough chairs. They had to bring in more chairs, and we still had people standing at the back, and it was a 2-hour session. So that one actually surprised me, but it was a lot of fun going through those markets, and also had another session on the currency market, what's happening on that front.
Doesn't surprise me at all, Dan. You are a standing room only type of guy. Speaking of anticipation, our live folks have been anticipating you joining us today. They're very excited. Option God says, Dan's the best. Can't wait to hear from him. Nichols says, what did he say there? Can't wait to hear Dan, the man. He's legit, so you are legit, he says. What? And then Mr. Unlimited says, Dan gets me excited about every subject. Makes me want to go out and trade it as he talks about it. So there you go, Dan. You're infectious. Wow. The folks want to hear you.
Thank you, everyone. Jeez. All right. The pressure's on.
Before he gets too big of a head, let's roll out the virtual chairs. It is standing room only here for Mr. Dan as well, as we head right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down what's lighting it up to the light side and to the dark side over there at CME. And because we like you folks, yet another bit of free data that we give you folks. Not only do you get access to the TWIFO reports, which are completely free, cmegroup.com/TWIFO. Because we like you, we go the extra mile. If you follow us over there on the old ad options on Twitter, we also tweet out this chart, which is exclusive to the people who pay for the tools over there, usually at Bantix. But it's a pretty cool chart, and we show you what's lighting it up to the light side and to the dark side. If you do follow us, you would see that it looks like it's, I would say, roughly 60-40 green over red, definitely biased towards the green, and certainly the largest percentage mover is to the green this week. I'll leave it to you folks to try to hazard a guess as to what our biggest percentage mover is on the week. But Dan, you know, you're back from your big sojourn, standing room only over out there for your session out there in Vegas. You think you could handle a little bit of moving and shaking, or is that beneath you now, sir?
No. No, excuse me. See, it just chokes me up thinking about it. Excuse me. No, I'm happy to do that.
All right, sir.
Market.
The floor is yours. Start wherever you like, sir.
Well, how about we start to the light side? And number 5, WTI, crude oil, up 2.58%. Number 4, silver, up 2.79%. Number 3, energy sector, up 3.14%. Now, that's a bit of a clue in terms of what may be number 1. Oats, up 6.25%, and that was number 1 to the dark side last week at minus 6.73%. So go figure. Number 1 to the light side, Nat gas, up 14.03%. It was number 3 to the light side last week at being up 8.19%. So Nat gas is really rocking and rolling. And if we look at the dark side, shall we? Number 5, material sector, minus 1.23%. Number 4, E-mini Dow, minus 1.57%. Number 3, consumer discretionary sector, minus 1.93%. Now, that was number 4 to the dark side last week at minus 1.83%. And, you know, consumer is a big deal. We look at discretionary. We look at the attitude, the confidence. We look at consumer spending. We spend a lot of time looking at the consumer because you want to remember consumer spending is 70% of our GDP. Now, number 2, Nikkei yen minus 2.57%. Number one to the dark side, copper minus 3.38%. And that was number two to the light side last week at being up 8.19%. But there, we've seen a change in attitude, I think, fundamentally. And that's why that transition's occurred. And maybe we'll talk about that later. So that's a look at the light side and the dark side.
Well done, sir. I knew you could do it. I knew you could handle it.
Thank you.
I will now spell you as we look at a little bit of what's moving and shaking from a volatility perspective. Remember, you could run these reports for yourselves. These are free and open to everybody. Just type CME and CVOL, CVOL, into whatever browser you rock these days. If you're, a Sleipnir fan, not going to judge. Whatever you like out there. That'll get you to the CVOL dashboard. And once you're there, set the high-low range to 1 week. That'll get you in tune with the show. Of course, if you're listening down the road, you may have to play with that a little bit. If you're listening a month from now, obviously, you might have to set it back to 1 month and vice versa. But then I like a nice grouped list, but to each your own on that layout side. Topping our list today, we have the energy aggregate CVOL, 47.25, up almost 3.5 points, about 3.44 points. So energy vol pop in today. Also pinning the needle for the week. In fact, last week we were talking about everything, I believe, with the exception of metals, pinning the needle to the downside, vol getting annihilated last week. Almost the polar opposite this week. Just about everything with the exception of a couple pinning the needle to the upside during our show right now. So energy vol, no exception, 47.25. The low for the week, 42.41. So quite the range on energy vol this week. Below it, we have the Treasury yield volatility. Treasury's been moving a bit this week. Yields been moving a bit this week. 103.46, up about 2.5 points. Quite the range for the week. We are at the high end of it right now, the low 96.01. So almost 7.5 point range for Treasury yield vol on the week. That's pretty wide, listeners. And below that, we have the aggregate commodities CVOL, 31.31, up almost 1.25 today. And that is also pinning the needle to the upside right now. So we're 3 for 3 in terms of just exploding vol right now. The low was 29.05. And then below it, we have FX. Again, FX, not typically known as a bastion of volatility. Looking a little bit juicier right now, about 8.25, up about 0.20, I should say. The range for the week, 7.83 on the downside, 8.57 on the upside. So retreating a little bit off the highs right now. So one of the few for this week that is close to the upper band of its weekly range, but not quite there. And then below it, we have the Treasury price volatility. Treasuries, again, not the place you normally go to for a little bit of volatility. That's reflected in that low overall number of 5.87. It is our lowest number on the CVOL chart. That's up 0.08 today. Also pinning the needle to the upside right now, the low 5.48 earlier this week. And then we flip the script for our bottom two, the ags. Ag vol coming crashing back to earth, 18.87, off nearly 0.5 point just today. And that is also the low level for the week. The high was 19.34. So ags bucking the trend, and also followed by metals. Metals, after having a very hot, a very spicy week last week from a vol perspective, also coming back to earth this week. 18.2 right now, off 0.6 just today. So metals vol kind of cratering today. That is also pretty close to the low for the week. The low is actually 17.96, so slightly below it. The high was 1880. So we have the ags and the metals kind of pinning the needle to the downside. Just about everything else popping from a CVOL perspective. Speaking of popping, Dan, the show is popping. We have a lot of potential products to sink our teeth into. Which complex should we start with first, sir?
Well, shall we take a look? Just trying to think. There is so much going. Well, we were talking about energy, and how about copper?
All right, to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the wonderful world of metals. This is where I usually say it's time to talk about the shiny stuff, but not today, listeners. We're going to go to cmegroup.com/TWIFO. We're going to go on that drop down pretty much to the bottom of the list to metals. But product family, we're not going to stop in precious. No, we're going to go down 2 more slots. It is time to, dare I say it, get base, listeners. It is time for a little bit of copper. And, you know, copper used to be kind of a sleepy product. It's starting to put up more numbers. Weirdly enough, copper moving this week off 3.38%. It was our number one dark side mover, as Dan broke down for us. Not exactly responding on the volume front this week, which is kind of interesting. A little bit shy of 20,000 contracts, 19,887 to be precise. Now, some of that obviously a truncated week, so take 1 day out of the mix out there. But aside from that, yeah, you might expect copper to be doing a little more. We have the rest of the week, maybe we will catch up. But kind of interesting, copper right now in that front future, listeners, 460 off about 6 cents since Monday, or 1.25%. Obviously, you go back to the end of our show last week, off nearly 3.5%, and 48% of what volume we have, listeners, going up in the March contract. It has about 5 days to go. So, front-dated copper paper, Mr. Dan, what is catching your eye in the world of the base metals this week?
Well, when it comes to copper, it's one that I've been actually leery of. And the reason is that some of the fundamental factors haven't been fitting. Although over the previous few days, it looked like it was. And here's what I mean by that. You know, copper is a supply-demand market first. Supply and demand does make a difference here. In gold, not so much, for example, but here it does. And what we had for a long time was a lot of supply, but not the demand. Over the last couple of weeks, we've seen a shift, and the shift was on the demand side. The Chinese government said, you know, we're going to pump some money into our economy. We're going to pump some money into building things, manufacturing, and even real estate. Well, those are sources of demand for copper. Now, let's talk about that broader picture. China consumes around a little over, actually, 50% of the global supply of copper. So what they do is a big deal. The other thing that's a big deal is China also smelts. They process almost 50% of the global supply. So the smelters in China are another barometer that you and I could look at. Are they increasing, decreasing? And then we can look at the tariff situation and what that may mean for demand. Well, just a few days ago, as you mentioned, we're at 460. A few days ago, we were near 484. So we've seen that drop. The expected increase in demand seems to be slowing down a bit. But here's what's different. And what's different is today. We were down the last 3 days, from my point of view, a loss of momentum. We are now at levels that about 6 days ago, we found buyers, and they're appearing again. So here's the thing we want to ask ourselves. The buying that we're seeing coming in today, is that selling for the last 3 days, buying to take profit? Has this gotten cheap enough that buyers are now entering a market? How we finish this week out is going to give us some clues. So for Friday, for tomorrow, pay attention to where this closes. You want to see it closing 465, 468 in that range. If we do, especially above 468, it's a sign of confidence going into the weekend. It's also a sign that buyers may be returning to this market. So if you're looking for bullish volatility, that's what you want to see. If we don't do that, if we do something less than that, then look for a sideways move going into next week and possibly next 2 weeks.
All right, Dan, throwing us a curveball, getting base to kick things off, but I like it. We've been talking a lot of metals of late, but not a lot of copper. And you're right, it is kind of inescapable at this point. You can't really talk copper without the other C word, which is China. The two are inextricably linked at this point. So whither goes China and their economy, so goes the demand for copper. Like we said, not a ton of paper on the tape this week. Looks like the big dog, I said we're at a 460. It's the March 4.5 puts going up a whopping 3,000 times this week. 3,000 times, pretty much exactly. 2179 on Tuesday, mostly opening 500 on Wednesday, and about 300 today or so against an OI of 2,200. So it's like folks are piling into some near-term downside puts. They got about a dime to go in copper. Only about 5 days to go, so very front-dated paper, but that's kind of the name of the game right now. I'm hard-pressed to think of a product that isn't just all near-dated all the time. But Dan, since you kicked us off in the metals, let's get into a product category that was proving to be contentious, shall we say, on our Futures Rundown program yesterday. We had another speaker at your event this weekend, Miss Carly Garner, joining us, and she was just taking the precious metals out to the woodshed. Gold and silver. She was not a fan, Dan. Let's just say she was. I forgot her exact words on silver. Oh, I had it on the other show, just to mock Uncle Mike. But it was something along the lines of it kills your dreams. I'll find her exact quote, what she said. But silver having a good week this week, up 2.79%. Dan, since we're hanging out in the metals anyway, and I know our chat loves themselves some shiny stuff. What's catching your eye in either gold or silver this week, sir?
Well, let's take a look at both of them. I think they're both interesting. I saw Carly in Las Vegas, and
she had bad stuff to say about you. Let me just say, Dan, I won't repeat it here for polite. She's like, that Dan guy, can't stand him.
Well, let's start with gold, because that's something that most people do have a tendency to look at. With gold, it's what I call an excuse market. Gold is a reservoir of expectations. In other words, if things are looking pretty shaky out there, people go to gold, right? That's the concept, is that gold holds its value in times of uncertainty. Well, we've had some uncertain things happening, but yet gold really hasn't responded as people expected. What I find interesting right now is that 2960 level. And it's something I call consistency of behavior. So if you have a chance, look at a chart, look at it in the candle format of gold. And what you'll see at 2960 are all these little lines at or above that level. And those lines are called shadows, or some people would call them wicks of these candles. I think that represents selling. And so what I mean by consistency of behavior, at 2960, 1, 2, 3, 4, 5, 6 times, we have been above that range, including today. It's sold off. So gold, the big challenge is to get a close above that 2960. And today, we made an attempt at doing that. In fact, we got up to 2973, but it pulled back. Right now, it's 2952, 53 in that range. So it backed off, made new highs, but it couldn't hold on to it. So buyers were not willing to commit to that market. That behavior implies a down day for tomorrow. It implies a sideways move. It is bearish, but the overall structure, it's not super bearish. it's still what I call a neutral zone trade. So for the next few days, maybe through next week, I'm looking for a sideways move in our friend, Mr. Gold. So we're not looking for strong follow through. The other thing you want to keep in mind, gold is based in US dollars. And all US dollar markets, most commodities, are going to be sensitive to the value of the US dollar. And today the US dollar is a little weaker. Therefore, gold should be trading higher. And right now it's not. So that piece of the puzzle isn't fitting in. Well, if gold's behaving that, well, wait a minute, Mark, should we talk about gold a little bit for your insights before we look at silver?
Yeah, sure. Let's get into that really quickly. I was just diving in because I found an intriguing spread. Everything I was joking earlier is near dated, and that certainly is the case in gold this week as well. Gold also looking pretty hot, listeners. Like we said, copper kind of taking the week off. Gold right back at it. Usually a decent week. We expect somewhere around 250,000, maybe 300,000 contracts on the tape. This is a shortened holiday week, and we're already threatening 300K, 283,000 contracts. So gold, no rest for the wicked, threatening some new highs, probably helping with that a little bit. Coming into the start of the show, 29.52, up about 51 handles, or nearly 2% just since Monday. Obviously, if you go back since our last show, and then it's a little bit of a different story. But near-dated paper, like we said, 27, almost 28% going up in the March contract that expires in 5 days. But actually, Dan, the biggest print, and I was just digging for this while you were talking, goes out to June. So that's 95 days to go, listeners. And that June future, if you're wondering, we're at 29.52. In that front future, the June future, 29.78. It is the 2,700 26.5 put vertical. Went up for size on Wednesday, a little over 15,000 times, about 15,500 times on each opening on both. That is the entirety of the OI on both strikes. So it seems like usually we don't get a lot of downside action in gold. Usually the calls are bid and the puts are offered. And that is the case in June as well. The puts are 3.1% offered. The calls 6.4% bid. They are coming down from this time last week. I don't know, Mr. Dan, does that float your boat going all the way out to June? So you got nearly 100 days. It's a pretty tight put vertical, 50 handles, but 15,000 times, nothing to sneeze at. 30,000 contracts total, obviously, of the 2,700 26.5 put spread in June, sir. Does that float your boat?
Well, it's surprising, but it does say something about the general attitude that people have about gold, and that is they're expecting it to go higher. And I'm wondering if how much of that was put on to capture some premium. Is it more of an attitude of people trying to bring in some premium, or is it really a reflection of the directional attitude of the market?
Yeah, I was digging through the blocks while we were talking, see if I could find exactly what price it went up for and everything. I can't find it. But what did go up on Wednesday, listeners, decent size out there. Yeah, you're right. Usually these things are biased towards the upside, so there is a good chance they're selling it. It's only 50 handles wide, so if they're selling it to finance something on the upside, I didn't really see what the other, I'll tell you what, let's go back out there really quickly to June. Let's see if we could see what the other leg is. 32.5, 3,000 vertical went up about 2,000 times on Wednesday. It looks like they were closing on the 3,000s and rolling up to the 32.5. So I suppose there could be a little bit of that. I mean, the 2,700 puts not getting much. So 15,000 by 2,000, I suppose that could be one way you do it. Sell that put spread to finance buying, or I should say really rolling at this point. 2,000 of the 3,000s up to the 32 halves. We have seen stranger things. In terms of more near-dated paper stuff going out in less than a week, listeners, it's the 2,800 puts. Again, a lot of puts on the tape this week, Dan, which is kind of interesting. Again, we're at 29.5 in that front future. These have about 5 days to go. 28 puts trading hot and heavy, about 5,000 on Tuesday, and then 5,000 again today. Not much going up on Wednesday, so about a little over 10,000 going up this week. Worth noting, the 28-10 puts also trading 5,000 times today. There's no OI on those, so that's all opening. So someone could have potentially done a 2,800, 28-10 vertical. Do you think 50 handles is not wide enough? How about 10 handles, listeners? So there's some weird paper afoot, Dan, but it appears to be a lot of put action. Does that surprise you, sir?
Yeah, well, yes and no. Yes, in terms of possibly people trying to hedge against our futures position. So that could be a reasonable reason why they're looking at those. Again, to garner some premium because of the attitude of a market looking for higher levels. But the bias is for movement up. The disappointment, it's the way we're doing it. Right now, if we had typical behavior of a strong metal market in the face of all the stuff that's going on fundamentally, we should be above 3,000. That would be the kind of momentum you would look to see. And we're not. We're just not seeing that level of commitment to the upside. And, we have a lot of uncertainty out there driving excuses for that market to take off. Another way to think about it, if our stock market is strong, in general, gold has a tendency to go down. Not always true, but in general, that's true because money to supply that stock market comes from someplace. And metals is one of those commodities. People sell it and they buy the stock market. People sell commodities to gain income to put it into the stock market. In the interest rate markets, typically you look for our 10-year notes and 30-year bonds to go down if the stock market's getting stronger because of our relationship between price and interest rate markets. So that could be part of what we're seeing here. We're just not seeing the level of anxiety that you want to see to drive the gold market. Apparently, the anxiety is there, but not the buyers. And I think that's what we're seeing here, a lack of them supporting this. I mean, look at the options that you're looking at. We're not seeing anyone super bullish.
No. And looking at our chat right now, Nichols saying he doesn't love that June spread. He'd be more of a seller than a buyer. Yeah, I think Dan and I are both with you. 2,700. I mean, by June, we could see it relaxing. Again, I want to get prices before I confirm anything on that, but not the strikes I was expecting out here. Also, Dan, I dug up now what Carly had to say yesterday about the metals. She said, gold is an accident waiting to happen. And she said, silver is where hopes and dreams go to die, Dan. So she wasn't mincing any words. And since you mentioned silver, and silver is number 4 to the light side this week, up nearly 2.8%. And because I know our buddy Uncle Mike somewhere, his ears are burning. He just joined me on the option block a little while ago. Whenever I mention silver, it's like the Thundercat symbol. I know he's going to look up. So let's see what we've got going in silver. Silver right now, listen again, pop out of metals, go down one slot in the TWIFO report. You will see silver there. 33.40 right now, up about half a buck or a little over about 1 2/3% since Monday. Obviously, since the end of our show last week, about 2.8%. Doing a little paper out here, 39, almost 40,000. That's actually respectable for silver, especially given it's a truncated holiday week. Silver, for as much talk as it gets, doesn't put up anywhere the numbers that gold does. And in terms of action, once again, we're all front-loaded, 5 days and less. That's worth 35.4% of the paper. By the way, if you're wondering what the vol is in silver right now, in 5 days to go, it's about 25.5, off a little over 2, about 2.13 points. That also pretty much backs up what we were seeing on the metals CVOL, where aggregate metals vol is just coming crashing back to earth this week. Skew-wise, it's not quite the same beast that gold is. The puts are slightly offered, only 0.8%, and the calls are slightly bid, only 3.7%. So that's a good way to describe silver. It's like gold, but less in a lot of different capacities and factors. Mr. Dan, what is catching your eye out there in silver this week, sir?
Well, I have to say, on the long side, you got to be careful here. Even though gold made new highs, we backed off from those highs. We're around 37 or 33.75 was the high, near that. And, right now we're around 33.40, like you said. So we backed off from that. What's interesting for me is structurally how we're doing this. We have terrible follow through. Not a good sign for an up day tomorrow. It's what I call straight line 3. It implies that they're selling the rallies, they're not buying the breaks. So that means as we make new highs, are they holding on to them? No. Last 3 days, as we've made new highs, they sold into that. The other issue is we haven't seen that follow through to the downside. So we've seen sellers at highs. So the issue is, where are they? How come they're not following through? How come we're not making new lows on today? So it says it's a little resilient, that it's holding its own. And, we got enough excuses out there to kind of drive that market, just like we talked about with gold, from trade to the Fed with interest rates to geopolitical situations like in Ukraine, which is really heating up. So we're not seeing these markets respond as expected. Not a good sign for continuation. And if it does continue, if gold, for example, would trade above 33.75, you don't want to see it close in that area. You want to see it closing around 34.20 to 25. You need a kick in volatility. The reason is the shadows, the selling that you've seen for the last 3 days. It means those sellers are underwater if we trade above 33.75, which means they buy it back to close those sold positions. That adds buying order flow, and you expect that stronger, higher move in silver. So that's what you want to look for there. But right now, for going into Friday, doesn't look great. It looks like an inside type day to possibly lower. Objective to the downside would be around 32.93. So we're looking for it to stay contained between 33.55 to 32.93, that kind of a range going sideways. So how do people want to go home over the weekend? Are they willing to hold on to the silver, or are they going to say, forget about it, I'm out of here? And tomorrow's close will give us a barometer of that attitude.
Dan, before we roll out of metals, we got an interesting comment. I have to admit, this didn't occur to me here. We were talking about copper earlier. We were talking base. This one comes from Mr. Unlimited. Kind of brings a smile to my face. He says, I wonder if stopping the minting of the penny messed with copper, even though that penny isn't copper anymore, but 1981 pennies and before are, and it's a closer step to letting people melt them down. Dan, we're always obsessed with China and copper. We neglected the death of the penny, Dan. How could we?
Well, that's true. That it looks like it's going to the side. But remember, there are millions and millions of pennies out there. So if we stop producing them, I don't see a shortage anytime soon. It cost us 3.16 cents to produce 1 cent pennies. And the thing we don't hear much talk about when it comes to coins, to produce a nickel, 5 cents, it costs us over 13 cents to produce that 5 cent coin. the quarter and the 50 cents, our production costs are still way below the monetary value. So those are in bad shape. But penny and a nickel, it does cost us more. So there is a big debate about what is the economic results of getting rid of the penny. I don't think it's going to have a dramatic move here in copper, just because of where it fits in to the global supply. When we think about how copper is used, how much does that penny production represent of the total consumption of copper globally? And I just don't think it's going to be enough to pause a long-term change.
Oh, you know what is getting explosive action again, Dan? It's inescapable. It's energy. Let's head there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
Dan, we have someone named Nichols in our chat, and he took offense at your saying it cost him 13 cents to make a nickel. So he took umbrage at that. He doesn't like being that pricey. But I digress. Let's get out to the world of energy. And you know, Dan, this is supposed to be a truncated holiday week. It's supposed to be a light volume week, but apparently no one told Nat Gas. No one bothered to tell them. I don't know what more this product can do. Of course, legging up over the 4 handle probably has something. We were just threatening below 3 not that long ago. As we're kicking off the show, listeners, 417 up another 45 cents or 12%. Just this week, if we go back to the end of our show last week, up a little over 14%. I mean, and I said, you know, products like copper and others, you know, penny jokes aside, they weren't putting up much volume this week. It is a shortened week after all. Nat Gas says the hell with that. You know, normally we used to see 400, 450, 500,000. 650, 750 was a really banger week. And that was a full trading week. 1 million, forget about it. That was explosive. It's a shortened week, listeners. We're closing in on 1.5 million. We're about 1.4 million contracts in Nat Gas. So at this rate, Nat Gas is going to be threatening the E-mini pretty soon in terms of volume. This thing is just an untamed beast. Dan, I don't know. Did you have a 4 handle and above on your bingo card, let alone almost 1.5 million contracts in Nat Gas on your bingo card for this week, sir?
Well, I have to say no. At the beginning of the week, I would not have said that. But 2 days ago, it was the way we broke out of that sideways move when we went above 380. You know, we were talking about silver and gold and how if they get above a certain level, we expect volatility. Nat Gas is a good example of that price behavior. So back here just 2 days ago, as it exploded to the upside, it's the way it did it. Not only did it give us a big move to the upside, it was around a little over 4, but it closed there. It was a sign people wanted this market. They were willing to hold on to it. That's a lot different than what we saw in silver today, where it also made new highs, but since then it's really backed off. In Nat Gas, we saw a commitment there. Now, let's think about what could be driving. Why are we seeing that? Oh, a biggie, if we think about how we use Nat Gas in the United States. A third we use to heat our homes, cook our food. A third goes for industrial production, steel industry, chemical industry. We use a third to produce electricity. We produce more electricity in the United States with nat gas than any other market because of pricing, and also it burns 60% cleaner than coal. Some parts of our country, though, they still use coal because it is so cheap geographically to the production of electricity. So let's go back to those variables. And what we've seen and what we're feeling in Chicago is cold. So we go back to consumption, electricity, heating our homes. So that perception and that reality drives nat gas. That's what we're seeing here. So the day before, nice strong close. That was on Tuesday. Wednesday, yesterday, another nice clean close, a little bit off the high. People are willing to hold on to this. We got up to 438. Today, we got up to 447 or so, but it's different. Today, we're not finding that level of commitment of these buyers. We're seeing a market that made new highs on selling, not buying. Now, the weather outlook has changed a bit. Supposedly, it's not going to be as severe. So that has an impact here. It's the perception. You figure this is a market that drives on the outlook, the expectation. You know, there used to be a joke about weather. If for New York, it was if it's cold, when the traders come into the World Trade Center, it's going to be an up day for crude, an up day for nat gas. Or in Chicago, if it's raining on LaSalle Street, the grains are going to be down. But nobody really thought about if it's raining on LaSalle Street, it may not be raining where we grow soybeans or corn. But this is also a part of that thought process, I think, that bleeds into what we're seeing today. So what we're seeing is a market that made new highs on selling, not a sign for continuation. It implies profit taking, or maybe it's just way overvalued. People look at this and say, holy Toledo, we got nat gas at 448. Oh, it's not worth that. So you got people that sell into it. That's the way it's behaving. What's also interesting is that we're not falling out of bed. We did come down. You know, we got near that 405 level, but we didn't penetrate it. We didn't break below it. So it's setting itself up for kind of a neutral position. I'm looking for a sideways move to lower for Friday. Do people want to go home long, or do they want to short it in the middle of this cold weather that we're having? That's part of the issue here. In addition to that, we can look at the global situation when it comes to nat gas. You know, we send 70% of our nat gas goes to Europe. And we also send some China's way as well. So that right now has been fairly stable. We haven't seen any drama for either one of those sources. But right now it's been the focus on United States weather. So I think we want to be cautious here. And if Friday we close below 405, close back down below that 4 that you mentioned, Mark. And I think that implies a sideways move for next week. So the directional bias that we're looking for in nat gas to the upside, I think is changing.
I was just digging while you were talking, Dan, because we were talking about a lot of paper on the show in nat gas last week, including the March 4 calls. I had about 10 days to go, and the future at the time was about below 375, about 372. And we were speculating whether we thought 4 and 10 days might be a bit of a bridge too far. And lo and behold, they worked out pretty well, Dan. The folks who were buying those, I'm looking right now. I got some prices here last week. During our show last week, they were trading for a little bit shy of 3 cents, about 2-3 cents in that range. So you could have bought all you wanted for 3 cents last week, listeners. And that 65,000 of them traded last week, Dan. So we were kind of surprised that it seemed like there was a lot of upside fervor out there. It seemed like maybe that was a bit of a bridge too far. And Dan, lo and behold, it's looking pretty good this week because those calls they have about 5 days to go now. But obviously, like we said, that future 418. So they're looking a little bit better than 3 cents right now. And looks like paper has been bailing on those all week, Dan. They traded about 40,000 of them this week. They bailed on 24,000 of them on Tuesday, about 8,800 on Wednesday. It looks like another about 7,400 today. Even still, there's still about 28,000 open on this strike. So, yeah, they're kind of doing what you're saying, Dan. They're maybe looking for a little bit of a turnaround and taking their money and getting the hell out of Dodge. They hit the 00 on the roulette wheel, and they want to get while the getting is good. Interesting. So, yeah, we thought that might be a bit of a stretch last week, and it seems like that turned out to be a winner chicken dinner. Did you get in on any of that 3 cent action here, listeners? I'm curious. Hit us up. I know a lot of you are still, let's say, nat gas curious. I mean, it's doing a lot of paper now, so it's kind of hard to escape it. I mean, it's starting to get like, the E-mini, where there's just paper for days. We don't have the put bombing quite yet. That's the next step we need to get, but it is very front dated, but also paper going out a ways. If you want a little bit more longer term perspective, listeners, the April contract with that futures at about a 410, and we have the 4.5 calls going up this week 30,000 times, listeners. Looks like opening all week long. The big day was Wednesday, 15, almost 16,000 there. 8,000 on Tuesday, 6,000 today. If that's not enough for you, we also have 26,000 of the 5 calls going up this week. 6,500 on Tuesday, about almost 10,000 each yesterday and today against an OI of 34,000. I don't know, 5. Can we get that far? I didn't think we'd be at a 4 right now, listeners. So 5. That seems like a bridge too far, but who am I to second guess such madness out here? We've also got, if you want some downside, we got the May 3 puts lighting it up 35,000 times this week. Almost all of that today, Dan. Looks like we have a 3/4 put vertical going up in May today. So that's all paper from today. Looks like they're rolling up. Looks like they're closing on the 3s because there's about 25,000 open to the 3s. Only 12,000 open to the 3/4 put. So they're rolling up their put protection in May, which again makes sense. The underlying explodes north. Take advantage of it to get a little bit tighter protection. They're not going that tight though. They're only going up to 3.25. But there's paper out here for days. Speaking of days, we are kind of coming up against it. But you mentioned crude oil, Dan. Since we're already in energy, let's get out of here on that one. WTI number 5 on our movers and shakers this week, listeners, up nearly 2.6% out here. And we were talking about the 3 and the 4 handle in nat gas. Another pivotal level to keep an eye on out here, of course, listeners, is the 70 handle in WTI. Are we below it? Are we above it? Right now, we are above it, 72.5, up about $1.80 right now, and just since Monday. Dan, what is catching your eye in the Texas teaser?
Well, in that market, really, I think the behavior is reasonable. We don't have a shortage of crude. We are seeing increasing prices. The magic number also, if you look at the highs for the last week or so, is $73. Now, we got right near there today, but we're also trading at 72.5. So we're not seeing that level of commitment. It's kind of like silver, if you think about it that way, and it's kind of like nat gas, although the dynamics here is different. And let's think about some of the drivers. One of the drivers for crude oil, just because it's based in U.S. dollars, is the strength of the dollar. And if the dollar is weaker, we expect upward pressure on crude oil. We're not seeing that. And we're also seeing a market that made new highs on selling. It's doing today what it did yesterday. And again, it looks very similar to silver. Not a good sign for continuation. We have plenty of crude right now, so there's not a big shortage to create that kind of issue. But there is the perception of the global supply. We produce about 120 million barrels a day of crude oil. United States consumes about 25 million barrels, 25 to 30 million barrels. We produce around 13 million barrels. We buy, the biggest place that we buy crude oil is Canada. And the second place is Mexico. The third place is Saudi Arabia. And right now, everything is, I would say, copacetic. Everything is calm. But that can be explosive. Fundamentals could create some volatility here. But I don't think supply is one of the variables that we have to worry about at this point. So it'll be interesting to see what happens. And OPEC plus, there's capacity there. A Trump administration is talking about Iran. Iran, in the first administration, they were down, I think, less than 2 million barrels a day. Currently, they're closer to 4 million barrels a day. And Trump is talking about making some changes there. That can have an impact in that country. But again, global supply can handle it. The other variable to look at is Russia. The sanctions that the administration did on the ghost fleet of Russia, that one is a biggie. Because what it is, these are ships that nobody kind of really knows where they're chartered. They're tankers. Russia can fill those up. They leave. It's very difficult to track crude. And then if you refine it, it's really difficult to figure out where it came from. And that's part of the issue here. And if you can shut that off, that really has an impact on Russia. The other thing that Russia lost, and I should have mentioned it earlier, but we're in energy, is there was a pipeline that goes to Ukraine. That was still flowing until January 1st. And that was worth $1 billion a year in fees to Ukraine. It was a loss of $5 billion a year in income to Russia. So we're seeing that dynamic changing, but it really is not reflected here in crude oil. So I'm skeptical of the upside. If you're long, nothing telling us to give it the big adios. However, if we trade below 71.61, I'd look to be a seller of that market. And we're looking for further movement down to maybe 71, 70 and a half range would be the expectation. Over the next few weeks, I'm looking for a sideways move.
All right, listeners, that music means we've come to the end of another epic sojourn. Man, if you thought it'd be a short, quiet holiday week, nope. Bangers across the board. In fact, Nichols says, this show is a banger. So many products I need to investigate. Yeah, that's kind of the point of the show, Mr. Nichols, is we're here to offer you up a variety of products and make you say, I might need to go investigate that some more. Maybe I need to trade that bad boy. So glad to see we are lighting some fires for you folks out there. Mr. Dan, if folks want to light some more fires in between your appearances on the old network, maybe check out your much ballyhooed videos. Where should they go? What should they do?
Well, there's a website, dangramza.com. There's a free daily video. I look at over 22 markets, and I select some of those markets for that video. If you want more details, there's an advanced video that goes into each one of those markets. And there's also a course that talks about the techniques that I use and the trade management. You'll see red and green lines, which represent buy and sell levels. These are not buy and sell recommendations. And you can go back over 10 years and look at previous videos. So you would see how those buy and sell levels change. So that's another resource. If you haven't looked at futures, the place to begin is watch them, follow them. And this may be a resource to take a look at.
There you go. Check them out if you're not doing it already. Dan Gramza, Gramza is how you spell that. You know how to spell TWIFO, listeners. CMEgroup.com/TWIFO, the place to go to kick the tires and light the fire. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk some vol. There's a lot of vol to talk. Should be a fun one out there. And then back one final time, exclusively for the cool kids in the pro, talking all sorts of wild, crazy options paper with our good buddy, the options guy, joining us for that one. If you want to check out that one and everything else we're cooking up over there on the pro, only one place to go. theoptionsinsider.com/pro is the place to go to learn more. And then back again on Monday for the option block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.